March 22nd. It's amazing. It's just this year is absolutely just flying by. It's every time I change the update. I know I say it each week, but it is amazing that we are now. We can officially say at the end of March. It seems like in a blink of an eye, summer will be here. We'll start. You start to hear all the cliches like go away in May and come back in September. So, yeah, we're right there. There's been just absolutely crazy movement in the last 24 hours, particularly in the currencies. A lot of comments about interest rates um, and changes that are coming. Some, for lack of a better word, some scary headlines, right? Uh, when I say scary headlines, some things that I'd heard yesterday, but then seen actual articles on it today and what it could mean in the future. A lot of the Fed presidents are now making comments that are like, yeah, it's the markets are screaming for big raises, and we're Bullard this morning saying that yeah, it's the Fed is responsible for the current inflation. Um, yeah, some important things. Now the markets tend to be it's hard to find something positive in the news right now, just as far as the comments being made. But the markets are shrugging it all off. So, what the markets are saying is they're not worried about that. They could say that it's not going to affect us and have not a lot of movement, but right now they're saying we're not concerned about that, and it almost looks like the market doesn't believe what all the Fed presidents are saying. So, we'll dive into that. Like I said, a lot of stuff going today. Not a huge actual news release space week, but some of the headlines and kind of what's coming next. I think they're getting ready for some big changes. But today is is the epitome of what currency markets can do. If you've been following the show, I've been mentioning how I've been a huge kind of bull for the pound, and today is the exact reason why. Absolutely monstrous movement today, based off of the pound. So let's just go ahead and dive right in everything. So first off, let me welcome the people that are brand new. Every week we get more new people in there, and I'm very appreciative of that. But for those that don't know me, I'm the president and CEO of a company called Keep Trading Simple. I've partnered with Nadex, and I've been working with them for a few years now. I've done articles. I regularly join their education summits. I do the morning show with Todd every day on YouTube. And then again, I do these analysis sessions, just trying to give traders kind of a week long view. I have different trading styles that I use. Obviously, there's the intraday trading, but there's also the swing side of it, as well as the wealth management. I've been doing this since about 1999, the Y2K. I just say I'm a Y2K trader. So I've seen crashes, I've seen interest rate rises, I've seen the carry trade, I've seen a lot of different things. I learned what stocks and traditional options, so that's where my background originally was. About 6 years in, I found foreign currencies, and that really became my kind of niche. That I just fell in love with it, and I loved everything about it. I think of things on kind of a global spectrum, so it fit me perfectly. Learned to trade futures. Ended up working for a company teaching people how to trade. I did come. I was a financial advisor for a brief time. I can say that I've actually worked on Wall Street. I didn't work on the exchange. I was not a floor trader, but I did actually. It was funny. I lived not even 2 blocks away. I could literally throw a baseball to the New York Stock Exchange. So I used to go and hang out with traders, and I actually worked on Wall Street. So the actual street itself, not the stock exchange. The bull is actually right outside my office. I could literally see the. I would see the bull every single day. So again, awesome experience. Loved it. When I was an advisor, I actually got a big kind of education on bonds. It's not something that normal people are necessarily are trading, but it is such a big, kind of influential piece of the market. So I was very appreciative of that, but realized very fast that I really couldn't do what I wanted to do. Like my goal in being that, I couldn't help people the way that I wanted to. So I left and came back out, and now I focus on teaching people. So this is kind of really where it's at for me. So if you have questions, you guys are more than welcome to answer ask whatever you want. I'll answer what I can. If not, I'll give you my email address at the end. And again, if you have questions, shoot me a message. I am kind of crazy right now. The two boys in this picture, lacrosse starts this weekend. So I have about 97 plate spinning this week, but I will get back to you if you send me a question. So, and the little one, actually, the girl is actually, this is an old picture. I have a boy that's 5 months old now. So the girl is now 3, but she had her first lacrosse practice last night. And I think she lasted 15 minutes before her legs hurt, and it was just lots of tears. So maybe she's a little young still. But with that said, let's dive into our education for the day today. So before we begin, because it's so weird, the slides actually say crypto.com, but what's odd about this slide, how it pops up, it still says IG Group. That is so, so strange. Maybe I have two of these. Um, I must have two. I was like, I've changed this thing 3 times. Crypto.com. There we go. I'm changing it on this one. That's so weird. I don't know why. Anyway, with that said, have you guys heard this before? But trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost at the end of the transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. None of the material presented here is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the crypto.com or crypto.com. I'm going to have to change that too. God, I don't know why I have two slides in here. Anyway, so let's go through our agenda for today. So we're going to cover the upcoming news events. What I mean by upcoming news events is not like when Russia crosses the border, right? Upcoming news events. I mean economic news releases. A couple speeches today. Rather dry week for the most part, but we'll dive into when there could be some additional catalyst, for lack of a better word. I love catalysts. I think they're great. It doesn't change where the market trajectory was going to go. It just helps it move a little bit faster. So it's kind of like it's the same thing. Like think about like when you and I have coffee in the morning, right? We're going to get up and we're going to go to our job one way or the other. Just when we get coffee, it helps us get there a little bit faster. Most times, maybe it's two or three coffees. I can admit that sometimes it takes two or three. But anyway, um, that's what we're going to really focus on today. Is again kind of seeing where those things are. Then we'll dive into indices, and again, indices are having an interesting morning. I don't know that I'm kind of wondering if this is setting us up for a fast drop with the markets going higher like this. It almost feels like a trap because I'm going to go through some headlines, and none of these headlines are necessarily great. But we'll see. And then we'll cover forex. Like I said, there's been some monstrous movement, some news from the yen. It's taken the Aussie yen, the euro yen, the pound yen, the dollar yen, even the New Zealand yen. Although we won't cover that one today. They've all gone crazy. Why? Because of the yen and the comments that we've heard from the Bank of Japan. So uh, then we'll dive after currencies. We'll go into commodities. Commodities, we're going to do oil, gold, silver, right? Um, some very, I want to say interesting, right? I use that word a lot, but oil's in an interesting spot where it is right now. We know what's coming. It's nice to talk about being able to just replace and, well, guess what? Russia is in. They got their fingers in everything. One of the headlines today has a little bit to do with kind of oil prices, but just in general, what's coming down the road. Unfortunately, we haven't necessarily seen kind of the worst of the oil situation. So, as much as I hate to say this, I think there could be more upside potential inside of oil. Love for it to go back down. Don't get me wrong. I'd love $3 gas. I'd love 250 gas, even $2. I mean, I could be swayed, guys. If you wanted to force the gasoline prices at $2 a gallon, I would be okay with it. I wouldn't argue with it on it. But I don't know that those times are going to come back anytime soon. One of my students said that where she is in California, it's still $5.50 a gallon for gas. So yeah, I can't even imagine. All right, with that, let's go across and go into our news site here. As you guys know, I tend to like to use Forex Factory. I just like how kind of how I can set it up, have a scanner at the top, makes it very very easy for me. Uh, before we kind of dive into the economic events, I always like to do this kind of check of where we are, what's moving right now, and what's happening in the markets. You can see right now, for the most part, everything is kind of tame, right? You can see we have some pound strength, right, versus the dollar. The pound dollar up 52, which is less than a daily ATR. It's nothing crazy, right? But you can see that the euro pound is down is down 56. That's actually a pretty decent movement, showing us that yeah, we got some pound strength in here. But the big movers on the board are dollar yen, 147 pips, double in ATR, and then the pound yen, 258. It was at 320 earlier today, but it's kind of leveling out. So yeah, some big news, right? Today is nothing but speeches, right? But they are pretty important. Lagarde made some very, very pointed comments. I'll cover those in a second. Besides that, Jordan and then Mester. Mester may make some comments at 5 p.m. Market will be closed, so it'll be kind of muted a little bit. But I'm sure Mester's going to say the same thing that every other Fed president is saying. Inflation's out of control. We got to be ready to raise. It's like you guys just had the opportunity to raise and you didn't do anything. So, yeah, we'll see. Anyway, for the rest of the week, tomorrow is the biggest day as far as news goes. As you can see, the CPI for the pound is expected to be 6%, three times what their mandate is. So, again, that's part of the reason why we're seeing so much pound strength today. We have Bailey speaking tomorrow and Powell at the same event. And then we have obviously the annual budget release for the pound at some point tomorrow. Crude oil inventories, it's actually, we're expected to have, I mean, last week we had an absolutely monstrous, it was expected to be a down draw of 1.8 million barrels. We had a surplus of 4.3. It was huge, right? Well, they're saying it's going to be down a little bit again this week. So we'll see what the reality is for that tomorrow. Bullard is speaking. And again, I would watch every single thing that this man says. He's nailed it all right on the head. He was the only one that dissented and said, we need to do a point 0.5. We got to go point 0.5. And now magically everybody else is like, hey, we could do point 0.5s. How's that sound, guys? So yeah, I'd watch out for him. I think he's the only one that's not using a filter. I feel like he's the only one giving it to us straight. So we'll get that. And then Thursday, we got some data out of Switzerland, right? We got the Swiss is their monetary policy, their rate. It's not expected to change, but the comments about when they could potentially start to change, that is as good as a change, right? And then we have some European data expected to be a little bit less than before, the manufacturing and services. And again, Germany's in close proximity. They've been affected obviously by what's going on in Ukraine. So that's out there. And then also on Thursday we have the core durable goods. Now that should be an interesting release. Durable good orders are expected to be a bit negative, right? Now again, with markets rallying, you don't want to see your durable good orders, kind of going to the downside. I mean, both of them are supposed to be lower. That's not really what you're looking for, especially into a market rally. So we'll see. Kind of is that going to be the turning point for the week? And then Waller speaking, right? And some flash. And then Friday, not really a lot. Retail sales, you can see, definitely much, much lower. The business climate definitely supposed to be lower, and then obviously the revised University of Michigan consumer sentiment, basically holding firm. Not too much change there. So, as I said, if you compare this week to a typical week, um, it's kind of slow, right? It's kind of slow. There's just not. I wouldn't say that there's anything out there that you're like, wow, you got to watch this one of the week. Um, I think there's some interesting, the Swiss data obviously important. The core durable goods again because of everything that's been going on, retail sales, and it's kind of fallen out of grace a little bit. But seeing a negative durable goods order, and again, when you look at this is kind of like the value of new purchase orders, right? Purchase orders is like, okay, what do we need to produce for you? You know, kind of interesting that that's kind of where we're leading, right? Into that negative ground. So again, it could be a big number, right? Last time there was a miss to the top side. So the question is, will this one be adjusted and there be a change last time? Maybe it wasn't as good as it was before. So, um, yeah, so we'll see. So again, not a very big week. A lot of speeches. When you click this, one of the nice things that I like about this is I can kind of click and figure out when people are talking. There's a lot of talk this week, right? And some big ones. And now again, Bullard and Powell. This is not two separate speeches. They're both at the same kind of emerging challenges for central bank governors in a digital world. So definitely something to listen to, but it's kind of the same event. Some headlines that I wanted to talk about. One of them about this digital event. These are the comments, and I mentioned this a while ago that like it seemed like Putin was not necessarily concerned. He knew sanctions are coming, and everybody was making comments about how hey this is much worse than expected. I was pretty sure that he knew what was coming, but he had made comments before that we'll just use cryptos. If you can't regulate them then and control them, then we'll just go there. And now we have the ECB president, Lagarde, saying that hey, listen, crypto assets are certainly being used to try to invade sanctions, and that's what Putin said he was going to do. The volumes of rubles into stablecoins and crypto is rising clearly. The flows of rubles into cryptocurrencies at its highest level since May of 2021. And then Lagarde says, I love this one. We have this one guy, I don't know who he is, but he came to a broker and said, I want to sell 125,000 Bitcoin. And I'm like, what? That's $6 billion. Yeah, we're going to send it through a company in Australia. So, says in 5 years, or what is this? Says in 5 years' time, many of us will have launched our digital currency. So again, we know that the digital cryptos are coming, or the actual digital dollar, digital euro. There's already been lots of mention, and this is one of the big thing. Money launderers, and like, again, these are all the chinks in the armor of crypto. That all the benefits of people. I don't want my money tracked. Well, it's the same reason the illegal people that are doing illegal things don't want their money tracked either. So, yeah, it's interesting. It seems like the ECB is now taking aim. And remember, China's done some things with it. Russia said, "Hey, we're going to use it to evade sanctions," and Guess what? Now she's coming out and saying it. So that's one of the big headlines. And again, for crypto traders, just something to watch out for. But she does say that we're going to all have digitals, which I think that's going to be the big question. Another one is this. This is a big headline to watch out for the rest of the week. And again, seeing it looks like they've all started to peak a little bit, but seeing them all in the green right now, this is a big one. Um, you know. Uh, I guess I can click the full story over here if it'll pop up. But fertilizer prices, you may wonder, what the heck does fertilizer prices have to do with what's going on in the markets? Well, food shortages absolutely do. I got trailers, I got things popping up everywhere. So this was an article that I heard about this yesterday, and this is extremely important. Okay, when you look to see where we get the raw materials from, okay, you'll see it right here. Russia and Ukraine are among the most important producers of agricultural commodities in the world, with exportable supplies in global foodstuff and fertilizer markets concentrated in a small number of countries. Fertilizer is a big thing, and we get a lot of it from Russia. So if we eliminate and stop doing business and people are no longer going to buy, that kind of hurts the foodstuffs, right? What they were saying is right now, where we are is farmers are starting to plant wheat. I had no idea. I'm not a farmer. I don't live in the Midwest. Know nothing about it, right? They said farmers are starting to plant wheat right now. The problem is with fertilizer costs spiking, they're not going to plant as much as possible, that we may now see large amounts of food inflation. And I kind of did a double take. I said, wait a second, what? Our fuel and food prices are already crazy. You're saying that we're going to have higher food costs? This is going to be a very, very big deal. Okay. Now, markets are kind of shrugging it off. They're like, yeah, we're going to go higher today. But if you're starting to look at where things are coming down the road, this is kind of a big deal, right? Wait a second. Our food costs are going to go up. They're already high, right? And they're going to get higher because we're not planning and we're not going to use it. This just shows how interconnected the rest of the world is. Now, with that said, today, on top of that, here's the surging food prices, or in Canada's talking about food and gas prices, are surging. Here's the Japanese news about how we're going to keep everything, weak, 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 weak. But looking back at kind of some of the things that we've heard, right? We have where Bullard is saying we need to get aggressive about this. The Feds need to get policy to neutral faster, the better. 50 basis points are definitely in the mix. The current Fed policy is fueling inflation. And now we're seeing it flow into other things. Basically saying that, hey, listen, it's look, our balance sheet, it's gone on way too long. Okay. So, Williams jumped on board. This is Williams talking about it. He's excited to talk innovation stable coins. Oh, this is stablecoin money. Williams has made some comments this morning. Messer's going to make things later on today. Where was the other one? Soft landing, Bullard. But there's another one that mentioned it as well this morning. But basically the same kind of piece, right? It's gone on too long. We need to do something, and it's only going to get worse. Is kind of the message we're getting across the board. Hungary, by the way, we're talking about 0.25. Hungary just raised 100 basis points in one shot. They're like, I'll see your 25 and we'll do 100. So rates are moving, but we are lagging very, very much behind. And again, my opinion on it is why we're seeing such major surges in the indices, because at this point it's all lip service. They're talking about it. As I said, Powell made comments. I don't have it right now, but talked about how inflation is going to start hurting the most. That or it's going to hurt the people that you know. Where is it? I wish I could find it. I lost it. I closed it, and this is what happens sometimes when I scroll too fast and roll through. But Powell basically made comments. I don't think it's this one. Is this? Oh yeah. It says we're looking good. I know this is the bonds ones. But basically, Powell has made comments now that it's going to hurt the lower class the most. Okay. And they're starting to make comments that are not something that he traditionally says. Again, it feels like politics is starting to get involved. That's probably why the markets are moving, because they want a soft landing. They want their cake. They want to eat it too, but it's not really how the markets work. So, yeah. Anyway, with that said, let's dive right into some charts, okay? And it's important to kind of start off. So I want to start off with the VIX. So the VIX is down, right? Let me go back to a 30 minute. The VIX is down today. And again, really, we kind of had that one pop yesterday with some comments. And then today it just kind of pushed back down because nothing's really happened. We're rather, on the Ukrainian front, rather quiet. The only thing that we've heard this morning thus far is, basically saying that, they could be, potentially committed to never joining NATO at this point. That was one of the things that Russia wanted, and one of the reasons why Russia, said that they were going to go across the border. You know, some people believe that, some people don't, but I know that that was definitely a hot button, was them joining NATO, and that it's on the table now to not, to permanently not seek, assistance from NATO or join NATO. So again, As far as the VIX goes, again, that is good news. It's taking some uncertainty off the table. Again, it's kind of appeasing people. So, again, VIX down, you expect to see everything up. The dollar obviously took a major rally yesterday. Starting from when Powell made his comments yesterday, market shot straight up. Europeans have done nothing but send it right back down again. We've kind of retraced it all the way down. And again, it's funny. Bounce off the 50, bounce, kind of stabilized a little bit over the 61.8, came down and touched um, the 78.6, and then at 10:30 reversed back up again. So we'll see how far we can get. But the dollar is a lot of movement up and then a lot of movement right back down again. We've kind of brought it back into level. So the indices overall, and I'll drop it down to a 15-minute. We had some levels that we were talking about selling, and there was this immediate crash yesterday. And again, we'll remove this. We never got the entry we're looking for. We're probably going to leave it there. We'll hold that one for later. Let's remove this. This big crash is kind of the PAL crash, right? Yeah, we're going to have to start raising it there. We need to do more. And then when the market kind of digested it at about 1 o'clock in the afternoon, it was like, whoa, what does that mean? Is he going to do anything? Not really. And then it came back down in the European market. They sent it up, 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 up. And right around that 10:30, 11 o'clock today, we're starting to see a pullback from some profit taking. So question is, where does this one stop? Is this the top? Are we going to roll? I would say in the near term right now, I mentioned earlier today, if you caught our session, that I would be looking for selling opportunities. None of the headlines are great. All the Fed presidents basically agreeing that they've moved too slow. That point 0.5 is on the table now. It's like you could have done it before. Bullard basically saying it's the Fed's fault that inflation is where it is right now, that we're at 40-year highs. Now, again, gasoline has been the big gripe. And again, food costs have been stinky, right? But now we're hearing about potential food shortages and how food prices are going to go higher because of things like fertilizer. Oof, that's not going to again, that's not going to make the summer fun. None of those are good things. Okay. And yet the market was rally, 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 rally. Now we've turned. So, question is, is this the top? I would say that it's probably a decent opportunity to take it short. Again, 10:30 is a big time for me. That's a reversal. That's sitting right here. Okay. So we were forming this level at 10:30. None of the news has been great. Is there catalyst really? I mean, did they say they're going to raise point 0.5 at the next meeting? No, that statement hasn't been made yet. And the Fed does have a history of saying in the past, committing dovish action and then following up with a very, very hawkish tone, but then doing absolutely nothing. Okay, so is this going to be different this time? Maybe. But right now, the market basically says, not so much. Let's just keep rising it. Okay. And again, is there going to be a fundamental change? Like, are we really going to feel the difference between the 0.25 and the point 0.5? Probably not. Yellen has already warned us that expect, price inflation to be a problem for the next year straight. But I will tell you, the statements that Powell made today about, less fortunate individuals and lower income, folks, and how much continued inflation and even more inflation is going to hurt. That's a political statement. Remember, as the Fed, he's not worried about individual classes. His mandates are employment, which again, the labor market is strong. They finally admitted that. That's a new turn for us, right? But it's basically inflation, which we know is high, and he gives us a bunch of reasons why. But in employment, and that's obviously going crazy. So again, when he's all of a sudden mentioning different classes, that's not normally what he would ever mention. So again, political nature to some extent. I like this up short. I like these short up here. Again, we are at a psychological number. We're at 4,500. Big psychological number, right? So with that, we do kind of have a confirmation. We do have lower lows. We do have a lower high, a lower peak that was failing to go any higher. I would say, taking this one short, potentially running this back down into this level here, not horrible. And again, the reason why, and this is why I would say that it's not bad, is because again, we had a nice rally up. This was at 9:30 today. We pulled back right before the market opened. We kind of pulled back to stabilize, and then bam, we exploded at 9:30. Now we got some profit taking. So do we push back down to the origin of the move at 44.69? I think it's highly probable, right? I think it's not a horrible trade. Um, is that it for the week? I don't know. I mean, like I said, right now the market is shrugging off all the interest rate, comments about, hey, listen, you're raising, but yeah, you said that in the past too, and then you did nothing. Um, remember, I mean, if you think about last time, there was an 80% certainty it was going to be a 0.5% raise. And what was the reason why they only raised at 0.5 or 0.25? Oh, well, the Ukraine situation is creating uncertainty. We don't know what's going to happen. Okay. So what happens next time if there's uncertainty with the Ukraine? I don't know. So the same excuse they used last time could be used again. And again, every time they show anything dovish like this, anytime there's uncertainty, boom, this is going to go higher and higher and higher and higher. But it's important to find great shorting opportunities. So that's where we are kind of with ES right now. And again, crafting trades at 12:30 in the afternoon, not always the best. Again, we typically wouldn't play reversals. It's a little bit late for this one. NQ wise, NQ had a very, very textbook opening. A couple things I want to point out on this one. Now, again, this trade is over. You're seeing this one do the same exact thing. It's turning and reversing back down again. Could it come all the way back down into the 14.4 area? Yeah, probably. That would make sense. I mean, it was nothing but straight up. But in the morning shows, what we talk about is look at those 15-minute charts. Look for price to pull back between 9 and 9:15. So here is the 8 o'clock. You can see that we had an area right here. Okay. Had you drawn fibs, right, it didn't go that high. We had a 23.6 right there. You can see that it pulled up and it based, and that was about 3 o'clock in the morning. Price rallied up, and then what happened? We started to pull back and pull back and pull back. And again, here's that 8:30 window. And what did we do? We started the base at 9 o'clock. 9:15 we pulled back. 9:30 it came back and touched that same basing level. And what did we do? Off to the races. Okay, so again, whenever you see those large pushes and those pullbacks right before the market, it kind of gives you a little bit of an idea of where are we going to go at the open. Now, would I have forecast that this was going to go this high? No. But was there an opening trade set up that you guys should have been able to grab? Absolutely. The way you should have traded it as well as done those short duration binary contracts on the 2 hours. Amazing trade. Amazing trade. Right, this was a huge explosion. You blew, I think, almost all of. I think you actually, I think it was. I think you blew every single one of them out on this push up. And the question is off of what news? There was none. Okay, it just shows you that the market can be positioned without really kind of anybody out there controlling it. So now, obviously, we're gonna have to change our fibs around. We've had some movement, and again, we can look for new levels. But again, it was a 23.6 pullback into an area, the overnight session where we had some basing. Let's see. Right now, I'm actually gonna kind of move this around a little bit. I'm not gonna take it from here. I'm gonna take it from probably here. Um, yeah, that kind of makes sense. So right now, I talked earlier about basically the downside target on this one being 14.4, right? 14,428. That just happens to be if we run from kind of the overnight to low to high. Again, there was a new kind of trend established in there. It just happens to coincide that same level that I mentioned beforehand just happens to be around the 50% retracement level. So I would say if you are going to get short this position today, I would look for 14,432 ish as being kind of a profit or your profit target on shorts. Is it a buy area? Nah, not so much. Right, there's not really a true level there, but I would say that would be kind of a target that I'd look for today. And again, if we stabilize today, maybe not today, but maybe tomorrow we start kind of shooting for that level. I do think overall, I get it. The labor market is strong, but inflation is going to be a major, major issue. It's a major issue now at a 40-year high. It's going to get worse. As I said last time before the last rate change, if they do a 0.25 and then all of a sudden switch to a 0.5, it means they did it wrong the first time. Okay. Um, Now that everybody's talking about it, I think they realize that they also did it wrong. And I just don't have a lot of confidence that, again, they're talking about 6 and 7 raises. The inflation story is not done, right? The inflation story is not done. COVID. I wish I could say that COVID is completely done, but China just locked down another 7 million people today. So I hope there's not something after Omicron. If there is, that's another uncertainty we can't prepare for. Food shortages and food inflation. That's another one of those things that we really can't account for. And again, shortages will raise the prices of food, but at the same time, my God, I mean, wow, do we go into a recession because inflation's getting? I mean, you got to pay the piper sometimes. So I think watch out for it. YM. Also, a similar scenario. So I talked about this morning. This one at 9 this morning did the same type of pullback, but it was kind of basing. I didn't love it. We'd been in this area before one other time prior, and we pushed the zone pretty far. All it did was it really punched through at 10 o'clock and then held and has now started the reverse. The opening print was right here. It was an all right level. I didn't necessarily love it. I wasn't super, I didn't think we were going to necessarily go through this one, but I didn't really have a trade set up because, again, we had pushed it. I mean, really, the zone should have been more like this because it had already tested it up to that level. It's kind of basing. I would say that for me, it's kind of the same thinking. I would probably try to box this off. Now, this is quite a big zone for me. I typically don't like to take anything that large. It's been up here. There's obviously sellers above. They found them already. Let's adjust this through. I want to adjust this to here now. And yeah, look at that. Where I had the dotted lines, 34,500 just happens to be where the 50% fib retracement level is. So I would say that's probably the downside target for the next 2 days. I think there's a little hiccup zone coming in right here. Why would I say that? Because again, we had this little pop and then bounced off of it, tested it, and then that was where they took off this morning at 8:30. I'd say watch for a little stick there, but don't be surprised if price comes back down and touches 34,500. I'm sorry, 34,500. It is a psychological level having that 500 in there, and it's been a level that, again, we closed there last week. Wouldn't be surprised if we touched that either. Russell. Now, Russell is the weakest of everyone. Russell, check this out. 9:30. For those of you that know the parabolic trade, right? That was a parabolic move. Now, was there an entry? Could you, should you have been long at the open for this one? I'd say no. There was no telltale sign of what was going to happen. We had some consolidation, and again, did we expect a move? Yeah, I mean we had consolidation in here. We kind of had some consolidation in here. Had it pulled down, was it in a basing level? It was, but would I had said that this is the best opportunity to go long? It would have been debatable, right? The explosion off of this shows you that the market did not care about interest rates, right? Here's why. Okay, here's why. Hope everybody's ready. The Russell is the small companies. The smaller companies are affected by the changes in interest rate increases more than the large companies. Why? Because the cost of lending, the cost of borrowing money is higher. Okay? It affects small companies. Just like if you think about the rich, gasoline prices going up 20 cents doesn't affect the rich as it does, the lesser fortunate, right? It's the same principle. But this much movement is out of the ordinary in such a short period of time in 30 minutes. It got really, really close to that 2100. This has happened to me a few times now at this 2100 level, but this type of explosion forward, this is a parabolic retracement move. And as you can see right now, we are lower than where the market opened at 930. Here's the 930 open. We are lower than that right now. So not only did we have a parabolic move, we had a parabolic retracement all the way back down again, beyond where we actually opened. And now it's moved 31 points in the opposite direction. It's a huge move, right? So finding the reversal up top again, unfortunately, I'd love to say, hey, listen, I told you guys where to get short. I didn't. I had a level marked up here. It's happened to me a few times at this 2100 level. But again, anytime you see large candles like this, you should absolutely, without a doubt, be looking to reverse this one. And again, now we are actually lower than kind of what it opened at, right? So yeah, there's your indices for the day. And again, I wouldn't be surprised if they come back, a little bit farther to the downside. Um, Going across the currencies, because this has been the next area where there's been some major movement. So Aussie dollar, okay? Aussie dollar, we talked about an area in the middle. We weren't really interested in getting short there. It'd been there a few times. And again, one touch, two touches, three touches, right? And pushed back down. And guess what? Number four is what broke. It based on the top, pulled back and went higher. So kind of did what it did. For me right now, Aussie dollar wise, yeah, I think this 23.6 level is probably going to come back and get hit. Let me bring it down to a 30 so we can get more candles in there. We had talked about having a sell zone all the way up top, up in the 47.62. It didn't make it up, but I will say from the European Open, which occurred right here, there's the European Open. You can see the prices basically moved in one direction. Now, we had talked about 73.76 being a target. You can see that it hit that late last night at 10 o'clock. So, again, there was our target hit. With it right now, I mean, 1, 2, this hit on number 3. We were waiting for shorts up top. So it's turning. The dollar strength is coming back in a little bit. Again, profit taking will absolutely come in. This one actually turned a little early at 9:30. So I would say most likely if you are short this one, I'd say look for targets here. This level, there's a little bit there, but I don't want to confuse people. I'd say I'm more set up for a short on this one, seeing Aussie weakness, dollar strength coming back into the market. The Europeans did nothing but send it up. The U.S. session occurred right. 9:30 is right there. So you can see it was nothing but straight up in the European session. Look for a retrace back down again. Now, this zone here, would I use this one? Not for an entry. I'd probably look for more of a break. I mean, we had a decent push. And again, 1, 2, this would be a third attempt down and reversing. It is hit number 4, so I'd be very, very cautious at this next level. Depending on what happens or where we get some bases and what it looks like here, there may be an opportunity. But for right now, I would say 47.62 and 72.81 are the two levels I'm looking for with 3 little hiccups, kind of potholes over here. Just watch out for those, okay? Aussie yen. Mentioned that the Aussie yen was kind of flying. Now, the Aussie yen, I really want to see a decent top put in. I don't actually have it yet. I mean, there could be a case made that, hey, listen, there's a decent basing level. Yeah, it's okay. Um, There's no candles in here. Again, I'm a price action based trader, so I look to see how the candles have formed, the open, close, high, and low. I like to see the reactions off of it. There's not a candle that I'm in love with in here. I just don't like the formations of where they were. It doesn't mean it's not an area that you could short. If you are shorting, I would say take profit right here. In this one, could you set up a trade for this? Yeah, you could. It would be a reversal from what we saw this morning. I don't even know if we can get a 1 to 3 in. No, yeah, actually 1 to 3 is right there. So yeah, it's right in front of the where I would say and get profit. So it's there. It's just a reversal. Again, we know that we have yen weakness across the board. It just got hammered in the overnight. So again, there's a potential trade there. Let me see on a 4 hour basis. Look at that. We had it. It's funny. You can't really see it on yours, but we had the hiccup here. We had a hiccup right here, which coincides with this, and then we had this pullback right from that level. So these levels have been hit, hit, hit. That's where this pullback was, and this pullback was on all three of those. So let's see. Problem is, look at this. We got it so far back. Yeah, this is where 4 hour wise, you can see right now is where there's turns. Look at this. And again, this may not even be fresh. I may not be able to go far enough back. And that's where the last take up was. There you go. You can see where they're hit. So there we go. So yeah, you can see that's kind of so we're running into. So I don't need this one right now. But yeah, I would say again, there's a 4 hour zone up here. We know that there's something going on right there. We saw it on the 4 hour, and that's kind of what we're bouncing off of. There may still be another opportunity to take that one short, but again, look for profit targets down here at whoops 89.05. I would say probably is where you want to make sure that you get your profit from. Okay, and that's where your 1 to 3 is. Euro pound. So mentioned this one earlier in the week. Euro pound. We talked about this breakdown here. We saw it. It was huge. We were talking about a break of 83.60. You can see that we got it. It came down at base in one candle. It pulled back up and grabbed this level. When we bring this across, you can see right here. Here's the trigger. This we've talked about this one a fair amount actually. Right there. So you can see it didn't last very long, and it kind of started to chop right around where this area was. So the trade is out right now. I would say that my belief on this one still holds firm. I still think this one has lower to go. I'm definitely in the bullish camp for the pound. I said that earlier in the week. Again, that's why we had this Harry Potter, this Harry Potter. We're looking for these pullbacks, and again, a drop, a base, and a pullback to the zones. Had you tended yesterday, you probably did well in this one trade. I still think it goes lower. Again, I think Europe still has a lot of exposure to the Ukraine situation. They are very reliant upon Russia. I think it's great. It'll get them some votes saying, you know what, we're going to become completely independent from Russia. Unfortunately, it's a very large nation. They do a lot of energy, which Europe needs. They do a lot of the fertilizer and the agriculture that Europe needs. It's kind of hard when you have a country that big that you're dependent upon. I mean, it's lovely that you're going to just say that we're not going to use them anymore, but the reality is they can't not use them at this point. So they definitely have some exposure. So again, I like to see this one continue to go lower for the rest of the week. Euro yen, obviously running back up again. Talked about this one this morning. We had 4 hour levels up here. We had this one marked off. Actually, we marked this one off last week. It's been a while. We talked about kind of two aggressives, and again, there was an aggressive area and more conservative. You can see if I extend this across, you can see that the first time we hit that zone, we did pull back down again. Then we went back up again and we hit the conservative and we dropped. And we dropped. So we missed the 1 to 3 by just a little tiny bit. This one missed by 3.3 pips. And then we came up, so you would have another opportunity to get in. And again, you can see it's quite deep in profit now. And I think we end up tagging this one in a bit. So it's already too late to get in. But this was one that, again, had you been following, you would have been able to get short on this one. I think again, we had the pullback from the 132, but unfortunately, the statements that Japan made, talking about consumer prices are likely to rise, but this cost plus inflation is expected to weigh on our economy in the long run. Okay, it's kind of like gloom and doom. It's premature to speak about exiting from our easy policy. Gloom and doom. We're continuing to buy back ETFs as needed as part of our monetary easing program. Gloom and doom. Japan, this is how they roll. Again, if you understand how their economy, it's an export-based nation. So I'm not surprised by this. Again, any type of large boom like it was in the overnight, you should be looking for reversals. And again, we had that level sitting there that we had marked off. Even if you had taken the aggressive entry, um, the aggressive entry rolled about 50 pips to the downside, so still pretty nice size mover, right? Um, Euro dollar. Okay, so you can see euro dollar is not as animated. We actually had a target down here of 109.46. It ended up pulling back, and you can see that the 23.6 kind of pullback level is kind of, it's not as important right now. Actually, I should probably remove it. Let me just remove it. It's kind of reversed at this point. So let's pull here up, and you can see what it did is it was the 50% that ended up kind of, people saw this and said, oh, 50%, that's it. Just there's no, oops, there's no actual buyers there, but just buy it because it's the 50. And that's what happened. I see this one also coming back down again. There's a few levels up top. Let's do this one. Let's pull this to here. Let's pull a overnight one and see what we got overnight wise. Yeah. So same reason why we saw it in that direction. You're seeing it right here. Right. So I think this one does come back down. Like, as I mentioned, the U.S. we're not as in severe of a situation. I hate to say it. If there are food shortages, it's the United States will obviously be affected food wise, but there are other nations that are going to hit it much, much worse. It's not like Americans are not going to eat. That's just the reality of the situation. But I think this one comes back down. We'll move it up right now if you guys are short. And again, you should have taken short from the overnight high to low. 50% pullback in an area of sellers right here. 109.73 is where it should be. Okay. And again, I think the dollar's in a much better position than Europe. Pound yen. Well, there's your stoppage. So we had some small levels in there. We talked about a hiccup here. It ended up Harry Pottering through. It based right into that 157. Didn't really like that one. I actually like the 157.89. I mentioned that. And it ended up going through and using that same level as a pullback. You can see, it's funny. Green all the way up, hits the level, has some issues, and then green all the way up. And then we ended up tagging this next 4-hour level. Right at 160. 160, absolutely huge psychological number for the pound yen. Actually, on a daily basis, let's see. The last time that we hit this, let's see. The last time we touched it was 2016. And you can see the response off of it in 2016 in one day. So, yeah, this is currencies. Just so you guys know, I mean, today looked like a big day at 140. Yeah, I'm not even going to tell you. You guys can do the math on this one. Yeah, this is a huge move. Yeah, yeah, huge. In the thousands. So, yeah, obviously a big level, and this is why we kind of focus on not magical numbers or percentages. We focus on what the charts tell us. So, again, that's what kind of turned us around. It's a 4-hour level. It existed. It's been there for a while. We've hit it. Is it time to short this one? I would say show some caution. Aussie yen, yeah, I like the short. Euro yen, like the short. Dollar yen, yeah, I kind of like the short. Not as much as the other two. Pound yen, whew. I want to say yes, but I don't like it as much. Here's why. And you guys can make the determination. Remember, any trading decision you make is all on you. There's no such thing as what Brian said. We got buyers right here. Okay. There could be an argument made right that we have some buyers sitting right here. Okay. Is this a huge pullback? It's got about 40 pips, right? You're talking about 40 pips drop into the downside. That's nothing. That's a blink of an eye for the pound yen. Yes, this is a 4-hour zone. We hit it. We pulled back. We made another attempt that was higher, and now we're pulling back, looking for some more resistance to go higher. The pound is at 0.75%. The yen is basically at zero, and they're saying we're not going to change anything for a long time. So for fundamental reasons, if nothing else but the fundamental reasons, I think that this one has the ability to go higher. Okay. Once they hit 1%, and again, they are probably going to raise their next, in the next month as well. Their next meeting, I believe they're going to raise again. They'll be at 1. There are some interesting things that they can do at 1%. The carry trade will start coming back on in a major way as well. Large banks and institutions will start throwing some money into this. There will be a real desire to start putting money in pound. Okay. I think that has the ability to jump us. Now, are we going back to the 180s, 200s, 205s? I don't know about that far, but I do think there's some buying opportunity here. So what I would do is I would look for pullbacks in the pound yen, and the way to play this for the next week is anytime we have any decent pullbacks, look for some decent levels of basing to punch higher. Do I want to buy it right this second into this level? No. I'd like it to pull back and find some basing. I'd like it to punch one. I'd like to get one more punch through and then pull back and then take it. So it's kind of a precautionary piece right now, or a pair right now. But I do think that this has the ability to go higher. It's the 1 yen pair that I'm going to say use caution, buy on pullbacks. But we got to chunk through this 4 hour zone first. Um, and again, looking at that 4 hour zone, we know that the last time we were there, there's absolutely monstrous movement out of it. Come on, right? We know that there was monstrous movement out of it, this huge drop. But if you look right above this zone, which is formed right here, there's another bit of a racetrack higher. I mean, up into the 163. So again, we got to clear it. We've hit it now twice. We're pulling back and we're starting to eat these orders up. Now it's just got a little bit more to go, right? A little bit more to go into that 163 range. So I think it's a decent one out there. Now, pound dollar. Okay, let's go pound dollar, 30 minutes. All right, bring us back into perspective. Where is it? All the way down here. So, all right. So, pound dollar. I actually did have a trigger on this one, a 132.27. We had some levels. I was like, yeah, not really interested in getting to these. We did have the pullbacks from them. You can see it based in there on its way up again. So this one, I was actually looking to take some shorts. It ended up punching through, hitting it, and then kind of bounced a little bit higher. I did say that this is going to be a harder position to trade. The reason why is because you have pound strength, you have dollar strength in there. Again, they're making all the right, they're saying all the right things, but it doesn't seem like the market believes the Fed's actually going to take the action to do it. The pound they have been, and again, one is such a monumental thing. Um, it's going higher. So this is one of those ones that I'm human. I was actually looking for this one. I was looking for the 50% traders to get in. I was looking for the confirmation on this one. It just unfortunately the market it started the base right below. It hit it and based in there, and then it popped. And if anything, if you didn't tell me what this was, and you said, "Well, what would you do on the setup?" This is actually more set up for a long, right? We had a pullback, or we broke through a prior zone. We had a base, we had a pullback, and now it's starting to kind of push higher. If anything, to me, this one looks more like it's a long opportunity. And again, by removing the pound dollar from the upper corner, it removes all biases. And if you're trading it purely as a chart, this one should be a long. And again, that kind of goes into my same sentiment that I feel like the pound is a little bit ahead. I think it's institutional money is starting to move there. And again, if you guys have been watching the channel, I said that they were beat up. Brexit was kind of like their low point. I saw nothing but strength from them this year. They've been leading the race as far as interest rate rises go. With CPI being 6, God forbid it comes in at 6.1 or even higher, they absolutely, without a doubt, are going to continue raising. They're 3 raises in, and it's not even slowing their inflation down. So they're going to get higher and higher and higher. More money will push across to them. Okay. Now, dollar CAD. Dollar CAD, I mentioned I really needed some direction. We're just basically moving sideways, which is funny because we have dollar strength in there, but we have oil higher. Oil's down about $4 today. This one's not really moving a whole lot. It's got 9 pips on it. Actually, if you look to see in the last 24 hours, it's moved a total of 34. In reality, we're just chopping back inside of the same channel. This is what it's looked like. We had that target of 125.93. It's kind of stuck, and it's just ding, 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 ding. There's no real direction, so no real movement. I will say though, we did have some data out of Canada. It was over here. I don't even see where it is right now. Basically talking about how inflation is becoming an issue for Canada as well. That they're going to start raising. Oh, is it right here? Yeah, seeing things. It rose again. So I think very, very soon we are going to start getting some comments about what raises look like. I've heard three. I've heard 3.25 ones in a row. I read one story about it. I think we're going to start seeing some movement in this one to the downside. Again, it's kind of caught up with oil a bit. I think once we tack oil on and, again, once we tack oil in and the other way around, what's it called? Interest rate rises, I think we see more strength. And remember, the current trend now, and this is great for votes, you know what? I mean, the United States, it was only like 90,000 barrels. It was like nothing for us to be able to say, we're not going to use any more Russian oil. But we can't tell our allies what to do. If Russia, or if Europe decides at the same time, like it's already been stated, there are no sources that are able to actually replace it all. They can change technologies and try to move things around. There is not enough supply right now in oil producing countries to make up for what Russia produces on a daily basis. So it's great lip service to say that that's going to happen, but the reality is if they do figure out how to have that happen, it means that there's much, much lower supply. We are taxing all systems. That's a boom, right? That's a boom for Canada, particularly because if they can produce more in Canada, they will. and then the United States will buy it all, right? But it still shows that there is some potential for this one. Do we get? I'm still looking for 125 in this. We got 100 pips to go. We got to break out of this zone, but if you guys know how to set alerts, if you want to set an alert, set yourself an alert right here at the bottom of this area. You will have support and resistance traders stepping in. Let's see, this number is right at 125.62. You're going to have support and resistance traders going, oh, but God, if we break this, I'm going big with those shorts. Big with those shorts. Because it's a very basic strategy. You're going to catch some people in that one. So look for a break of 125.63, right? A break below, and then again, look to target 125 to the downside. Dollar Swiss. So dollar Swiss, we had the short last week. It chopped. It went back up. It grabbed that zone one more time in the overnight and continued to go lower. Again, this is now 1, 2, 3. This is hit number 4. It held. They can, but I'd be very cautious using it again. We're really kind of where we were. Um, dollar Swiss wise, 18 pips in 24 hours. So not really not really enough movement for us. It's just been going back and forth. I would say, hmm, I think this afternoon we'll have more dollar strength coming in, but if we can get back down lower, I think that's probably a decent area. It has been hit a few times, so it's kind of like, well, why wouldn't we just take that one short? Um, the Swiss, we have meetings later on this week. Um, Jordan is speaking, I guess at 11:15, so we really didn't get any big headlines. Hold on, let me go back and hit all again. None. Where is it? Tomorrow. Yeah. So tomorrow morning early, we have the policy. I don't think they're going to change it, but I'm curious to see if we're going to get some Swiss strength. So I'd really kind of in the overnight right now, I'd be looking for opportunities to go long. The reason why is I think we get short. I think the Swiss will actually have some strength that comes from that. I don't think they're going to do a surprise raise, but I do think they're going to mention, you know, if things continue to progress or the Ukrainian situation continues to, decline, the hostilities, I think that they will start to raise. I think they're going to have to. If they start mentioning inflation about getting control of inflation, I think those are all great, great things. So if we rally up in the overnight to 93.71, take it short, that's up to you guys. It has been hit. It's not fresh. I typically only like fresh. I don't have anything fresh until way up higher. But I do think finding shorting opportunities is kind of what we're looking for. I think there's going to be some Swiss strength coming in. Dollar yen. So dollar yen. As far as the opening candle goes today, this one is really, it was like finding a top on it. These are two 4-hour base levels. It needed to peek its head right out of the top, right at 6 o'clock this morning. I do think this one is more short, right? I think the yen data is in. The US data, people don't seem like they're really kind of trusting it right now, at least the indices, but I do think it rolls back a little bit. Um, I think there's much better setups in some of the other currency pairs than this one. But if I had to make a call, I say, hey, listen, I'm a little bit more bearish. There's two 4-hour zones lapped on top of each other. If you wanted to take something, if you were taking this in the overnight, there would have been your trade. You'd be short right now, this position, right? Um, is this a blockbuster grade A base trade? Not so much, right? It's okay. I'd like to see, if anything, I'd like to see it break that yellow box and then come lower. I think that would be a better opportunity here, but I don't know if we're going to be able to get that much of a retracement on the yen, that much profit taking, if it makes sense. Okay. Now, cryptos, I think it's important to talk about. You can see since Lagarde's comments at 11, they're starting to head back to the downside. And again, I'm using this just as a gauge. Nadex doesn't have a way to trade it yet. It will come out eventually. We'll see it. It was up more than that. It was up $1,900. Now it's only up $1,400, and you can see that it's pulling back. If you're trading this in a technical way, you would say, hey, listen, there's a base here. If we break it, do we go back down? Reality is that's definitely something you could see. Is price coming down back to 41.20, 211. Lagarde's comments, not good for Bitcoin. The fact that they're calling out, that's not what crypto traders actually want to hear. Regulation is great for them because they're legitimate. Talking about how they're using Bitcoin to go around sanctions, not really what you want to hear. It only takes another large nation to outlaw financial transactions in that cryptocurrency, and God, it goes bye bye. Okay. Ethereum, again, same thing. You're seeing kind of a peak. You're also seeing that same level of basing. You see that a break of that basing and actually probably more down here. Again, that also leads us to look at this and say, hey, on a technical basis, Bitcoin, Ethereum should go down. Bonds, let me mention them before I go to commodities. Bonds are low and holding low. Again, rising interest rates. The bond market is like, hey, listen, interest rates are coming. If anything, with them holding completely flat today from the open, the market's looking at this and going, well, rising interest rates is bad. They're definitely going to rise, but how much are they going to rise? This also doesn't appear to me like the market believes that they're going to raise point 0.5. Again, going lower, we know we're going to rise. Every time we do raise, it does hurt bonds more. But looking at this saying, yeah, to me, that looks like, yeah, you're going to raise, but you're not going to raise by point 0.5. That should have led to a much farther push to the downside. So interesting how the market's looking at that. Last but not least, let's go into the commodities. Now, oil. Yesterday in oil, we had an area, we talked about it. It was a 50% retracement level. There's a little bit of leeway in there. Again, a lot of people will use the 50 and then the 61.8. That's a little bit far. Had you been drawing a zone in the middle, you would have used this level here. And that's kind of what we dinged off of this morning. We're looking for a bit of a pullback. We were talking about it. I drew this yesterday and it's kind of pushed down. I think oil at 108 is kind of where it belongs right now. I think the next shoe to drop is going to be really what happens is I hate to say this, but Russia has made comments now. And it's kind of like Russia is trying to stay relevant. There's an article this morning from CNBC talking about how the Russian economy is actually smaller, that there are some shadow assets that were maybe over exaggerated, that they're not as big, but that Ukraine is a distraction to keep the people away from what the economy recovery looks like. It's down right now. But again, Russia has made some comments about starting to cut Europe off if they don't stop getting involved. I think this is a temporary reprieve. Don't forget today, this afternoon, we have the API oil inventory report. That's going to give us kind of some true insight to really what tomorrow looks like. Um, right now, they're saying it's going to be a small down draw. Ready, small down draw. They were off big last week. We'll see what API says today, but I think after we get the API report, look for the European session to kind of take and start dominating this one, with it kind of stabilizing and kind of sitting around in this area. Question is, do we come back down and test this lower level, right? Do we come all the way down and, you know, could we potentially hit 102 or 10? I guess actually it's 103, right? Yeah, 103. Um, if it's a bad API figure, I wouldn't be surprised if we get down there before the European session. Then that's our takeoff point for tomorrow. So I think a lot can happen. I think 103 is a magical number, and I think on the top side, I think you got to look at 113. It's a $10 range, but there was a lot of movement last week with a huge surplus number. This week, what if they were wrong? What if it actually comes in as a negative 4.3 this week? Could be a nice boom. And again, we'll cover that first thing tomorrow morning. Natural gas is a ripper today. Um, Again, we kind of pulled back. We didn't quite, we were talking about coming back to 474. I missed it by like a little tiny bit yesterday. Um, yeah, it was a 1030 reversal at a fib level, and we got front run on it. And you guys can see the response off of it. You got to hate when that happens. It happens, but man, 1030 reversal, 50% fib level, demand zone, and we missed it, and it took off. So now we can adjust things. It went back up when we talked about this level at 514. Again, that's what it ran into this morning early. Right now, I would say that the 50% fib level, you can see there's a level right here of basing. So I would say that this would be the next level as far as potential, whether long or shorts, would be $4.85 in the natural gas commodity. We are cycling through, so there is going to be more kind of opportunities to go down. But remember, Europe needs natural gas, and they get it from Russia. So obviously, this is always going to be a hot button. Gold, taking it on the chops. So it didn't get all the way down to the 1889 level, but again, yesterday when Powell spoke, we were sitting right in this area. We took a bit of a hop up. We grabbed that 1940. Had you attended Monday session, we talked about the 1940 being a good sell area. It was confirmed right here, right? There was our confirmation on it, and we can see it go through, and it touched it yesterday at 2 o'clock, and it's been nothing but down. As I am bullish with kind of the pound and gold oil, I have been bearish silver. I said get short silver on any opportunity. Yesterday was the opportunity on the comments. Whether you believe they're going to raise interest rates or how far the raising of interest rates is meant to crush inflation, which again, gold and silver are the hedges, I still see this coming lower. Okay. If you're looking for a short opportunity for gold, I would say if you can get through this level right here, you could have a potential short, and it looks something like that right there. Okay. And again, buyers step in just a little bit below this, right? If I put a horizontal line there, you'll see that was the last quote support and resistance trading. So could be a decent short. And again, that looks like a break of 1910. Okay. And again, I still think we hit lower. And again, silver down 1.6. Silver is also collapsing. We said that we had a level here. And again, you had your 1, your 2, your 3, and 4 is what broke it. It went higher. I grabbed this. And then again, the overnight, an absolute collapse. And we talked about profit targets. I missed it by a little tiny bit. There is your profit target. 24.55. So again, I still think this week, I said it last week, we'd get down to 24. We didn't. We got super, super close last week. Um, I'd say, again, rising interest rates, crushing inflation across the board. Again, this one continues to go a bit lower. So, oh, that was it. I'm 1 minute over today. 101, not too bad. So, with that said, make sure you guys mark it off. Whoops, not that way. Trying to go this way. Make sure you mark your calendars again. March 29th, our final March broadcast. We'll see what we have. We'll see what type of updates. I would say in the next 24 hours, big things you got to watch out for is that API oil report today. Again, remember that's industry specific. The EIA tomorrow morning. And again, a couple choice comments going to be made in the next 24 hours by Fed presidents. I think you'd watch out for those. If you have a questions about anything I said today, again, email me right here, support at keeptradingsimple.com. If I don't get back to you in 24 hours, again, like I said, this is a crazy week for me with the boys' schedules and everything else with lacrosse opening up this weekend. So give me a little bit extra time, but I'll answer what I can. And with that said, thank you for joining today. I'll see you guys tomorrow morning on YouTube, and I'll catch you then. Take care.